Bitcoin versus Ethereum. This is the one you've all been waiting for. Welcome back to the Bitcoin Layer. My name is Nick Bhatia, and today I'm going to give you 3 reasons why I believe Bitcoin is a far superior investment to Ethereum. And it all comes down to Bitcoin resembling a commodity and Ethereum resembling a security. Number 1, the origin story. Bitcoin started in 2008 with a paper released by an alias, Satoshi Nakamoto. The software dropped in 2009, and for the first couple years, Satoshi Nakamoto was one of the only participants in this network. Because of this, Satoshi Nakamoto owns what is estimated to be about 5% of the Bitcoin total supply. Satoshi Nakamoto left the Bitcoin project within a couple years, and Bitcoin has existed without Satoshi Nakamoto's presence ever since that time. For Bitcoin, there is no center, there is no company, there is no foundation, there is no person at the middle that makes all the decisions. Ethereum began in 2015 with a pre-mine. This is a sale of Ethereum tokens in exchange for Bitcoin. 72 million Ethereum tokens were issued in this pre-mine. 60 million of the coins were sold to the investment public, and 12 million coins were given to insiders. The supply of Ethereum today is above 120 million, which means that almost 60% of today's total supply was part of that pre-mine process. Data shows that 40% of that pre-mine went to the top 100 customers, giving us indication that the ownership of Ethereum is highly centralized. This resembles the issuance of an equity in which the majority of the shares go to the management and the ownership. Number 2, how does each cryptocurrency deal with hacks? Let's talk about Bitcoin first. The Mt. Gox hack, which happened in 2014, it was estimated that 7% of the entire Bitcoin supply was stolen. This was a huge event for Bitcoin because Mt. Gox was basically the main cryptocurrency exchange at that time. No effort was seriously made to undo this hack, meaning once the coins had been stolen, there was no organization of people in Bitcoin that came together and said, let's find a way to undo this hack and roll back the blockchain to a point before these coins were stolen. Why was no effort made to undo this hack? Because in Bitcoin, there is no central decision maker. It has been several years since the Mt. Gox hack, and we are still going through a lengthy legal process for all the customers of Mt. Gox to try to get at least some of their money back. Now let's talk about the big hack that occurred in Ethereum. In 2016, within a year of Ethereum beginning, there was a big hack called the DAO hack. Now DAO stands for Decentralized Autonomous Organization. This was a project in Ethereum in which 11,000 investors came together to participate in this decentralized autonomous organization. There was a bug in the software, and a third of the assets were stolen from this DAO. Now, reading from a report at the time, the Ethereum Foundation decided to roll back the entire Ethereum blockchain to return lost funds. Ethereum issued a type of software upgrade known as a hard fork, which made it as though the DAO never happened. This resulted in a competing project known as Ethereum Classic, where the DAO hack lives on. So what happened was the Ethereum Foundation, the group of insiders, decided that this hack in which people lost money needed to be undone, and the Ethereum Foundation decided to basically undo this hack. This split Ethereum into Ethereum Classic, in which the hack still lives on, and Ethereum, which went back in time and undid the DAO hack. Let's think about Ethereum versus Bitcoin and how they deal with hacks. In Bitcoin, if a hack happens, there's nobody to undo the transaction. In Ethereum, there is. And this is evidence that decision makers exist in Ethereum that have power over the protocol, that have power over the project. Now, this is an enormous difference between Bitcoin and Ethereum. Just think about a commodity like gold or oil. Is there one body, one organization that makes all the decisions? No. even with oil, with OPEC, with Saudi Arabia, countries and organizations that have massive amounts of power, they still are not able to dictate things on the entire world. In Ethereum, we see that time and time again, like in 2016 with the DAO hack and what's happening right now with its transition to proof of stake, that decisions are made in Ethereum in a centralized manner that resembles a security, just like a company with shareholders, a board, and management. Number 3, the supply. Bitcoin has a supply schedule that was written by its creator, Satoshi Nakamoto. The amazing thing about Bitcoin is that its supply schedule has never been changed, and it has never seriously been challenged either. This gives investors in Bitcoin the confidence that what they own will always be certain in the context of the total Bitcoin supply. Now, the security mechanism that keeps Bitcoin's supply unchanged is mining. It's the energy consumption of Bitcoin miners called proof of work. Proof of work works in a way that basically disallows any one actor from coming in and exercising force on the network. This keeps Bitcoin much like a commodity that nobody controls. What about Ethereum? Ethereum has not only decided to change its supply algorithm, again in a centralized way, but it's actually planning to eliminate proof of work as its security mechanism. This means no more mining for Ethereum. Well, how is that going to allow for the decentralization of the network? It doesn't. In fact, you must have 32 Ethereum staked to the network to become a validator in this new proof of stake process. This means that over $50,000 is required just to be an equal player in the Ethereum network. Now, this 32 Ethereum that are required to participate as a validator exactly mimic a shareholder system. This is how companies work. They have shareholders that affect decisions being made at the company level. If Ethereum is operating with this proof of stake system that resembles a shareholder system, how is that like a commodity? It's not. It's operating like a company with shareholders. This is a security. Leaving you on this final note, if part of Bitcoin's fundamental valuation is its mining and its energy consumption and its proof of work, how will the market react to Ethereum after it has fired mining as its validation process? We'll have to wait and see. Thanks for watching Bitcoin versus Ethereum. Make sure to like this video, subscribe to the channel, and let us know why you take a Bitcoin-only approach to cryptocurrency. I want to thank my sponsors, Zebedee and Voltage. Zebedee is a Lightning Network Bitcoin company focused on getting Lightning Network powered video games into the market. Voltage is a company focused on building Bitcoin and Lightning Network infrastructure. So if you're interested in getting your own node, contact Voltage and see what they can do for you.